Hello, good evening to everybody in New York. Good morning to everybody in Tokyo. And thank you very much for joining our webinar tonight, or this morning in Tokyo. We're here to discuss a reform of the Tokyo Stock Exchange, which has the potential to be a very big event in terms of the Japanese economy, Japanese corporate governance. And we're here to discuss with one of the representatives of JPX the reasons why that is so and the prospects for that enormous impact becoming a reality. This is a very detailed topic, and I thought I would kick it off for the benefit of those of us in the audience who are not experts by asking or outlining some basic issues, why this is such a big topic. So let's start by asking, why do companies list their shares on a publicly traded shares on a stock exchange? And there are three basic reasons. The first is to raise money that they can use to run their business in long-term investments and in working capital. Secondly, having listed stock is a kind of currency that a company can use in M&A transactions, so that rather than pay cold cash for a company that I might want to buy, I can pay with my own shares. Thirdly, what is becoming more common is that the CEO of companies are paid at least some percent of their salary, their bonus, in the shares of the company, and that arrangement is in order to align the interests of that CEO with the company's share price, with the investors. Investors buy those publicly traded shares in order to build wealth for themselves over the longer run, either by seeing the price of those shares appreciate or by collecting dividends that the company pays out to its shareholders. In the case of Japan, none of these is really the main issue. The number of companies who have been listed on the stock exchange since the 70s has multiplied by really 300%. These companies in Japan tend to have different reasons for listing. One is just the prestige of being a publicly traded company, particularly if you're on the first section of the stock exchange. It's not really a form of, it was not a major fund of corporate finance. That role typically was given to the banks until the turn of the century. Bank finance was the dominant mode of capital that companies would access to run and build their businesses. It's not really, was never considered a currency for M&A, because until quite recently, the rules about using shares as currency in M&A did not really make that possible or practical. So why did Japanese companies list their shares? As I said, it's for prestige. It was considered also a way to recruit new graduates, that if you were a publicly traded company, that somehow meant you were top class, and that would attract new graduates. Oddly enough, that doesn't seem to be a strong a pull as it used to be. We look at some foreign companies in Japan who have delisted their shares, like Aflac, and that doesn't seem to have interfered with its ability to attract top-class recruits. So the complaint about the Japanese stock market as it is currently constituted is that publicly traded companies don't behave like publicly traded companies elsewhere. They have traditionally not felt a responsibility to communicate with their shareholders. There are certain classes of shareholders that they would refuse to meet with, including some foreign shareholders. They did not readily accept the idea that independent directors should sit on the board and hold the management accountable to shareholders. And this has led to a real sluggishness of the Japanese stock market because the shares are not listed in order to appreciate. They had been listed to establish a system of cross-shareholding where companies would hold shares in each other so that nobody would get voted out of office. They were really much more of a relationship commitment, a business relationship commitment, than an investment. So relative to other stock markets, Japan's has performed fairly poorly until quite recently. One of the big catalysts to increase the performance of Japanese stock indices, which, by the way, have still not recovered to their pre-crash days of 1989. The Corporate Governance Code was introduced in Japan in 2015, the Stewardship Code a year before that, And this unleashed an enormous amount of optimism and energy about Japanese companies finally becoming beholden to their shareholders. And the primary obstacles to that relationship that were identified were, first of all, cross-shareholdings. So there was an enormous pressure put on Japanese companies by the corporate governance code, by proxy advisors, by certain shareholder activists to reduce these cross-shareholdings that occupied the company's balance sheet for no profitable reason. The second big push was to put independent directors on the boards. Prior to the corporate governance code, Japanese companies were really run for the employees and for the customers, and there was very little concern or consideration given to other stakeholders, most notably investors. So the presence of independent directors on the board were meant to be the road by which other stakeholders could enjoy some of the benefits of their company being a listed company. The other issue that the corporate governance is attempting to address is the plethora of companies who own companies who are listed on the stock exchange. So if I think of a company like Hitachi, in the old days, they had many listed subsidiaries whose would be run for the benefit of the parent company. And if you were an investor in that subsidiary, your rights were easily trampled upon. So these are some of the issues that the Corporate Governance Code and the Stewardship Code try to address. And progress has been made. Progress has been made. It has been slow. And I think the TSE is now, the TFSE and the FSA have seen an opportunity to tighten up the rules that listed companies are expected to obey in order to make the Japanese capital markets much more free, fair, transparent, and responsive to shareholders and stakeholders. The reforms are expected to further accelerate the process of disposing of cross-shareholdings. It's expected to encourage a lot of MBOs and mergers because there are many companies who are listed on the stock exchange who probably don't see any future benefits of being listed and would prefer to be private or would prefer to be acquired by their parent companies. There have been many reforms that have been attempted to make Japanese companies more subject to market discipline and therefore more efficient, more profitable, more innovative. I would start with, when I was living in Japan in the 1990s, the introduction of the Holding Company Act, which allowed certain companies, first banks, to set themselves up as holding companies so that you could do some very aggressive restructuring below the level of the holding company. There were reforms to M&A laws and procedures that made M&A more possible, easier. And this Corporate Governance Code and the Stewardship Code, as I said, was also an attempt or had some success in opening up companies to stakeholders and shareholders. Now we have the TSE coming out with new reforms, and I guess what we're looking to Kimura-san to explain to us is how is this going to drive the ball down the road faster and in a more certain direction. Clearly, these other attempts to make the Japanese stock market more vibrant, more responsive, have had some success, but not enough. So I am going to turn it over to Kimura-san. I would say a couple things first. For the reporters in the audience, he asked that his remarks be off the record. There will be a recording posted on our website at some point, but for the moment, please keep his remarks off the record. He does have a series of slides that I know the professional people in the audience are going to want a copy of. So hopefully you've got your pen out. His email address is R for Robert Kimura, one word, rkimura, at jpxnyrep.com. And he has said to me that if anybody wants a copy of the slides, all you need to do is shoot him an email. Last, I would note that the TSE is in a process of collecting public reaction to all the things that Kimura-san is going to tell you tonight. and he will tell you where to go. But I would encourage you, if you have strong views, opinions, questions, you should submit public feedback to the JPX. The public comments period is open until February 26. So without further ado, I'm going to turn it over to Kimura-san, who will walk us through the details of how this transformation is going to occur. I have a bunch of questions that I have to ask him, but if you have questions of your own, please feel free to put them in the Q&A box, and I will do my best to get to them. Kimura-san, please take it away.
Yes, thank you very much for your nice introduction, and thank you for having me today for this event. At the beginning of this event, so I was very much worried because I won't have anything to mention in the event because you almost explained everything, which I really wanted to explain in the event. But anyway, I'm going to start. So by the way, so I heard that participants of this event are very diverse, ranging from student to specialists or expert of Japanese equities. So it could be a little lacking for experts of Japanese equities, but I'd like to focus more on the big picture in terms of why this reform will be carried out, rather than the details of the new requirements or regulations. And of course, I'm willing to touch on the detailed information, such as a numerical standard of the new listing requirement, or how to calculate the new topics if requested. But anyway, I'd like to start from the basics today. And I have a slide, so I'm going to show this slide with you. I hope the slide is right in the screen. Is that good?
Yes, it is.
Okay. So first, I'd like to explain the reason behind the change in the market segment and topics. So as you can see on the slide, currently approximately 3,800 companies are listed on the Tokyo Stock Exchange with a market cap of about $7 trillion. And as shown in the chart in the middle, TSE has now 5 market sections: a first section, second section, Mothers, JASDAQ Standard, and JASDAQ Growth. And among them, a first section, or TSE1, in which a variety of professional investors invest, is the largest section where over 2,000 companies are listed and accounts for more than 95% of the entire market cap of Japanese equity. And compared to the US market, this equity market in Japan is still, unfortunately, underdeveloped, I would say, in many aspects. In particular, the secondary market for private companies is not well developed. And it is difficult for us to delist listed companies, unlike in the United States. And in other words, once a company is listed on the Tokyo Stock Exchange, it will not be easily delisted from the market. So it is said that in many cases, the goal for Japanese companies is to achieve the listing on TSE1. What this means is that there is a lack of dynamism and metabolism in the equity market in Japan. Even though the companies lose their competitiveness, they can stay in the market. So you can easily imagine that the more we have less performing companies in the market, the poorer the performance of the index and stock market becomes. And indeed, so comparing the performance of S&P 500 and topics over the last 20 years, S&P 500 has grown over 2.8 times more, while the topics has remained at 1.4 times in the same period of time. So S&P 500 and topics have different criteria and calculation method, as you know. So it is not appropriate to measure everything by comparing only these two indexes. In any way, so one of the structural issues in Japanese equity market is that there's a lack of dynamism and lack of incentive for companies to further improve their corporate value after listing on TSE1. So in order to change this situation, we have implemented various reforms, as Alicia already mentioned, such as introducing a introduction of the corporate governance code and stewardship code for the purpose of further stimulating the market activities and enhancing the corporate value. And this time, we decided to further advance this reform by reviewing the market segment and topics index. Specifically, as shown in the bottom of this page, the current 5 market sections will be reorganized into 3 segments. Some of the current sections were actually inherited to TSE through the consolidation with other stock exchange. And over time, the definition and objectives of each market segment were becoming, I would say, ambiguous or sometimes overlapped. So the listing rules were also complicated by the presence of multiple segments and a special rules for section transfer. And unfortunately, certain section was also regarded as a penalty box where a company that hits certain criteria was put in. So this time, the first key point of this reform is to reorganize these 5 sections into 3 segments based on the much clearer concept for each market. The new segments are prime, standard, and growth. The prime is a market for companies with large market cap and high quality of corporate governance. Standard is a market for companies with a baseline market cap appropriate as a public company. Growth is a market for companies with high growth potential that have a relatively higher risk from the business performance viewpoint. And there will be no special procedures for transitioning between segments. And a company basically has to newly apply for the listing if they would like to switch its listing segment. So we expect that the positioning of the market segments will become much clearer than ever before. The second key point of this reform is to change topics calculation method. So now you can see on the slide, constituents of topics are all TSE1 companies right now, which means that topics is attached to the market section. For listed companies, this means that a listing on TSE1 automatically incorporates them into the major index called topics. And this guarantees that they are invested by domestic and overseas institutional investors. And as I mentioned earlier, it has been pointed out that this is one of the structural issues that prevent listed companies from making effort to enhance their corporate value after listing on TSE1. So with that in mind, TSE will take it as an opportunity to separate topics from the notion of the market segmentation. After the reform, topics will no longer be bound to the market segment. However, since 50 trillion yen of assets are linked to topics already, and given that market impact, it is difficult to instantly switch to the new topics, even for the market participant as well. So therefore, we will introduce these changes in topics in several phases over roughly 3 years in order to minimize the negative market impact. So I will not touch on the detail right now, but this method of switching is very important. And at the same time, it is also a little bit complicated. So as mentioned by Alicia at the beginning of this event, I'd like to explain this point in detail to market professionals separately from this event. So please contact us if you are interested. And now go back to the discussion of the market segmentation. So as I said, the reform is to sort out the 5 market sections into 3 segments and clarify each concept and listing criteria. So in addition to that, right now, currently, corporate governance code is being reviewed. The details are not yet determined, but that will be announced in the spring of this year. Those principles suggested in the new corporate governance code will finalize the entire listing regulations for the new market. So please wait for a little bit more on this point until the new corporate governance code will be disclosed to the public. So I like to move on to the transition process of this reform. So let me go to the, yes, this is the one. So you can see some specific date and item here. So here, the first key date is a June 30 this year. Based on the data as of end of June 30 this year, we will measure which segment each company can be listed among 3 segments. And we will communicate the result to each company. This communication will be thoroughly processed between Tokyo Stock Exchange and each listed company and will not be disclosed publicly. Thereafter, during the 3-month period from September to December this year, each listed company can choose which segment they'd like to list on. In January next year, 2022, TSE will disclose the listing segment of all listed companies. And in April next year, the new market segment will start. It is not yet fixed, but in general, many companies that are currently listed on TSE1 are said to choose prime segment. We don't know yet. However, the companies that do not believe that they fit the higher standard of the corporate governance required for the prime companies, or those who believe that the listing standard for emerging companies are more fit, can choose standard or growth segment on their own between September and December this year. And topics will also be separated from the concept of the market segments and at the same timing. And in order to minimize the market impact, as I mentioned, so we will gradually implement the changes. But the key point or information is that all topics constituents the day before the reform will be included in the topics regardless of selected market segment. However, the weighting of the company that can satisfy the certain criteria in the aspect of tradable share market cap will be gradually reduced every quarter until the January 2025. So the aim of this reform is to provide incentive for companies to further increase the corporate value by introducing such mechanism. And there's no one way to increase the corporate value, as you may be aware. So of course, improving the profitability of the core business itself is one of the ways. And there are numerous, well, a number of initiatives, for example, say enhancing the disclosure, attracting new investors by disclosing information in English, and introducing a different perspective from diverse independent directors. And another tactic is to unwind cross-shareholdings, which is said to be one of the Japan's structural and long-lasting problems, as Alicia mentioned. So when calculating the tradable share market cap, which I mentioned, the weighting in the index and the cross-shareholdings will be deducted after the reform. So this means that the market cap of the companies with large cross-shareholdings is valued lower, leading to a potential exclusion from the topics. We expect that the introduction of this system to further push the unwinding of cross-shareholdings. So this is a basic overview of the reform. The idea is currently in the public consultation period until the February 26th this month. So if you have any opinions, so please contact us until February 26th. And as already mentioned, so if you are interested in more detail explained in this presentation, so please contact us so we can share this presentation with you. Thank you very much. Alicia, back to you.
Great. There are a couple of questions from the audience, and I certainly have questions. I'd like to start at the top. Many of us, including myself, have seen so many attempts to invigorate the Japanese market and to make these companies more dynamic. And nothing has seemed to work really. I mean, there has been some progress, there has been some baby steps. It's better than it was, but there has been no real full embrace of market discipline. So when I listen to you talk about the conditions for being a prime company, for example, um, I think about the complaint that I've heard from you, including tonight, that companies who are listed in the TSE 1 just coast, right? They have no incentive to improve. What are the real penalties that companies in the prime market will face if they don't improve? For example, I have a specific question. We talk about the corporate governance code, and only the companies who can show they are abiding by the corporate governance code will be in that prime section. However, let's remind ourselves the corporate governance code is comply or explain. You don't have to comply with it. You can say, I don't have independent directors because I have good reasons. Are these the kinds of companies that you're going to allow into the prime, companies which offer potentially good reasons why they're keeping their cross shareholdings or why they're excluding analysts from annual meetings and so on and so forth? So what is the real stick that you have? Uh, Even if the companies in prime meet your targets initially, how are you going to keep pushing them from behind?
Well, that's a tough question, actually. So, what's a real push or the way? Of course, the biggest penalty for a listed company is to being delisted from the market. And we are monitoring the listing regulation. So the hardest penalty would be delisted from the market because of they hit the delisting criteria. However, so at the same time, so number with independent directors, for example, or let's say the English disclosure or other items defined by the corporate governance code, we think that it is kind of too early or too soon for us to implement these items as a listing regulations. So in case if we introduce that as a listing regulation, that should be a minimum. So it's a universal minimum. But if you look at the 3,000, more than 3,800 companies, so each company have different reasons why they have a cross shareholdings or why they have only one independent directors. So we have to provide an opportunity to these companies to explain to the public why they are doing that kind of conduct. And so first we think that disclosure is very important. So disclosure from the listed company. And with that disclosure, so we really wanted to encourage dialogue and discussion between the listed companies and investors. And in case the listed companies and investors interact more and more, so listed companies will understand what's actually the investors are looking for and what point they have to change or revise, improve in the long run, in the future, without staying and being shiny in the market. So that's the first point we really wanted to encourage among the listed companies. So that's why we first introduced this as a corporate governance code. It's kind of soft role, comply or explain basis. It's not a mandatory. And then it's a step-by-step approach. So in case we recognize that many companies satisfy some certain criteria, and we can introduce that as a listing standard, we are going to implement that as a listing standard.
Yeah. Again, I don't mean to give you a hard time, but the new topics that seem to be being discussed by the committee who is reforming the corporate governance code, has to do with increasing the number of independent directors and meeting some sort of ESG. I don't see that there's any really dramatic new things coming out. Uh, the other thing I wanted to mention is several years ago, when was it? Was it 2011? When a new stock index was introduced in Japan called the Nikkei 400. And these were supposed to be the 400 best companies in Japan, including corporate governance items, right? And that index was a complete flop. Nothing happened. It didn't do what it was supposed to do at all. Why do you think it was a failure? And what has JPX learned from the failure of Nikkei 400?
Yeah, you're still asking me a lot of harsh questions. So, uh,
We're friends.
and we, it's a, well, to be specific, the index is called JPX Nikkei 400.
Right.
Yeah, and introduced in, I think it's 2013. And we recognize, of course, that a JPX Nikkei 400 is not performing well compared to the broad-based index such as topics. So
Even though it's supposed to have the best companies in it.
yeah, so now I'm very careful in the terminology. So many companies, well, there are many reasons cited as actually, and so I will introduce one major opinion. So the major one is a JPX Nikkei 400 is focusing too much on the ROE. And you may be aware that ROE has a characteristic of being reversed within a short period of time. So that's why that's a point what so JPX Nikkei 400 is incorporate the company when the stock price is very high, and right after that the stock price drops because the ROE gets lower. So, but I'm not arguing here. So whether this analysis is correct or not. So what I'd like to say is that this cannot be directly tied with whether the overall market reform is successful or not. So this is very specific to what index is representing and how the index itself is calculated based on its own approach. And we always take into account that opinion from the market participants, and we will review, of course, for the index. But we can't simply measure whether the reform is successful or not just by the JPX Nikkei 400.
Okay.
So that's my opinion.
Okay. Let me push you a little bit on this idea of cross-shareholding.
Yeah.
In the Japanese financial reports, this is called strategic shareholding, right? And my understanding, I think it was you who taught me this, there is no regulation, there is no standard of what that definition is. It's up to the company to decide. So if suddenly I'm told that I cannot go into the prime market unless I reduce my cross shareholdings, what is to stop me from suddenly reclassifying strategic shareholdings into like investment securities? How are you going to police that kind of behavior? And my related question is there are many great Japanese companies like Toyota who have shareholding in 100 companies or 70 companies at least, right? How are you going to fight with them and say, sorry, you're not a good company because you have holdings of 70 other companies? It puts you in a very difficult position. Okay? So what is the standard that you are going to measure cross shareholding? I mean, is there a danger that this cross shareholding thing can be too easily manipulated?
Yeah, that's true. I would say it is true that there's no concrete definition of a cross shareholdings, or I'd say the strategic shareholdings. So, but we have to be objective, as much as objective as possible, of course, and we will rely on the statutory document when we examine the nature of the holdings. So let me explain more specifically. So a shareholdings, and other than purely for investment purpose in the large shareholder report are deemed as cross shareholdings when we calculate the tradable share market cap. So the large shareholder report is a statutory disclosure document, and that has of course a penalty if a company discloses false information, as you mentioned, like just a relabeling the category of the shareholdings as it's a pure investment without looking at the reality. So this is a way for us to police the measure the actual amount of the cross shareholdings for us when we calculate the tradable share market cap.
Mm. We have about a dozen questions in here, Kimura-san, so I'm going to do my best. A lot of them are very long. But on the question of independent director, this is something that, that I have thought about. independent, if the gentleman says, I hope I'm pronouncing his name right, Mr. Fazal says he has experience as a board director on a Japanese company. Um, Most Japanese companies, the board of directors consists almost entirely of executives of the same company. That means instead of outside supervision, board of directors consists of insiders supervising themselves. Yeah, so I guess this is an argument about independent directors. My observation is that there are a small number of independent directors in Japan who serve on multiple boards. You have people, it's not uncommon for people to serve on 4 or 5 boards. And sometimes people say, well, that's because there's not enough talent in Japan. I think that's nonsense. And I would be in favor of limiting the number of boards that somebody can be on to 1 or 2, because that would force Japanese companies to go outside the circle of their old friends, right? And to bring on new talent. But could you talk to us about what the definition of independent director is in Japan and how it differs from other countries?
I see. Okay. So the first is the definition of independent directors. It is a kind of complicated because we have a lot of exemptions there. So let me introduce a pretty simple version of the definition of the independent directors. For example, let's say an executive of the parent company or subsidiary companies of that company within the past 10 years cannot be independent, of course. Or for example, a close relative of the incumbent executive of the related companies cannot be independent. Or persons who right now have a business relationship with that company cannot be independent. So any other parties can be deemed as independent. So basically saying, so the definition itself is, I would say, it's pretty much in line with an international standard. So it's not way different from the US or European standard. But as I mentioned, there is a certain types of the exemption. So it's totally, sometimes it's a subjective. But basically, I would say, definition is almost in line with international standard. And your question is, I think, a multiple
Boards.
yeah, overboarding, right? So
Yeah. You know, in America, there is a move to limit the number of boards and so on.
yes,
I've heard
yes,
some good arguments about why my suggestion is a bad suggestion. A friend says, well, you know, it's a good way to fertilize. You know, you go from company A to company B and you spread the best practices. Another person told me if I have only one independent director, if I'm only one
mhm,
job, then they have to increase my pay.
yeah,
So there's that. Let's move on to a question from my friend, Mr. Hokugo at Pension Fund Association. You've described about, you know, you will ask companies what section they want to be listed on, and there will be a transition period. And Hokugo-san's question is, you know, this transition period would take some time for the company to qualify as prime. Who is going to certify that that company is making progress? And who is going to certify that that company is sticking to the plan to become a prime? Um, he says it's a good initiative, but is there any chance that, you know, the companies end up being prime zombie companies? And is the TSE going to be the guard dog who keeps these prime companies on the path? Or this is actually my concern as well. Do you need some sort of independent third party to
mm,
verify that these companies are making progress?
I see. So right now, at this stage, we are not considering to have a third party to examine I would say, the companies who cannot clear the prime regulations. But instead, a JPX regulation that is a separate entity under the same JPX umbrella will handle the examination independently.
I see.
Yeah, so I don't want you to misunderstand here, but the main purpose of the examination and during the grandfathering period is not to kick those companies out of the prime segment or not to kick those companies out of the topics. Indeed, instead, it is actually so to incentivize the listed companies to explore the further growth. So the grandfathering period itself is not yet fixed, actually, at this stage. but it won't last forever. So it has a certain, the deadline, of course. With that in mind, those companies who are not likely to satisfy the requirement for the prime with the discussion of Tokyo Stock Exchange are encouraged to choose standard or growth voluntarily during this period. But actually, so it's too early for us to discuss this process because we haven't yet reached that stage right now. So we don't know at this stage how many companies cannot clear the hurdle of the prime, or how many companies will voluntarily choose standard or growth. So it probably takes several months from now.
When we think about the Tokyo Stock Exchange right now,
Mhm.
many people have said, I think you've said, there are too many listed companies. And my understanding is that 2/3 of companies that are now listed on Tokyo Stock Exchange would qualify as small cap in the United States. Is it your, this is not a polite question, but is it the aim of the JPX to encourage such small companies which really have no reason to be listed to do MBOs or to do mergers? And in short, would you expect the number of listed companies to decline by a lot, by little, by not very much? What do you think will be the end result of these reforms on the attractiveness of being a listed company in Japan?
Okay. I should be very careful
Well, let me
when.
make it easy for you if I can. Another problem I see as a former professional is there are way too many companies in Japan to make information efficient, right? If I'm running an equity research department like I used to, I would need a team of at least 1,500 analysts
Mm,
to cover all the companies that are listed on the stock exchange. That is not going to happen.
mm,
So there is a real problem with information getting to investors
mm.
because there's too many companies.
Well, the whole purpose or primary purpose of this reform is not to decrease the number of listed companies, of course, as a whole. But in the end, well, there might be some cases, the companies who cannot satisfy the requirement in the market and then merged by some other listed companies. That could be possible, of course, and we really wanted to encourage that M&A activity at the same time. But when we make such kind of comment, some people take that in a wrong way. So Tokyo Stock Exchange is encouraging the delisting of the listed company, but we are not promoting the delisting of the listed company. We want to promote a healthy market activities within the market. And as a result of that market activities, of course, some companies will be delisted, but it is not the whole goal for us. We want to create environment that force the listed company to improve themselves more and more in the long run.
One of our other friends, Benjamin Adams, is asking whether any of these reforms will have requirements for parent companies to deal with their listed subsidiaries.
We don't have we are not thinking about a specific regulation or listing requirement for a parent subsidiary listing at this stage.
Mm-hmm.
But we always think that we are considering that issue as well.
Well, I suppose it comes under cross shareholdings because the parent company will hold shares in the subsidiary.
Mm-hmm.
And I want people in the audience to understand that this has been a very, very, very difficult issue for investors who are holding shares in a subsidiary company. When an MBO happens or an M&A transaction happens, the rights of the minority shareholders tend to be put in the shredder. So we would love to see some progress on that. I have a fun question for you now from somebody who is anonymous. He says, under the new TSE market segments, which segment is most suitable for Tesla to list on, growth or prime?
Well, actually, so we are not allowed to make that kind of comment. So it would be pretty personal. So I would say Prime.
Okay, okay.
Well, because the Tesla is right now the size of the Toyota, right?
Right, but again, if we think about the governance, there is no separate chairman, and there is no, from CEO. There's a lot of, there's a lot of closely held shares.
Yeah.
There's a lot of issues with ESG, et cetera, et cetera. So maybe Tesla's not good enough to be on your prime market.
Well, we also have a different business, actually, the index. So we don't want the huge company in the growth market and don't want them to stand out.
Mhm.
So we have a lot of incentives there.
Yeah, there is a question from somebody named Mark about ETFs, and this is a very interesting subject that I think people might want to hear your thoughts on. Mark's question is, BOJ purchasing ETFs, is it creating potential increase of enthusiasm on Japanese equities? I think, my reaction from the investors I deal with is kind of the opposite, right?
Mm.
And I was thinking about this. I was talking to a friend at BOJ, as I said to you earlier, that there seems to be a very vicious circle here, which is the BOJ invests in ETFs that track topics, and the best companies and the biggest companies, their share prices keep going up, so BOJ keeps buying more, which means the free float of those companies becomes smaller. And
Yes.
you can easily see how, there could be a point where BOJ might own 35% of the free float of fast retailing.
Mm.
There's people who think that's true. And then it doesn't get to be on the prime segment. And isn't that illogical?
Well, there are some, well, illogical points, of course, but I will explain in a simple manner. We recognize, of course, that a BOJ is purchasing a topics ETF or Nikkei 225 ETF, and the amount is getting larger and larger almost every month. And our biggest concern in the market is how they are going to unwind that ETF in the market. When and how they're going to sell that ETF into the market. This is our biggest concern because it looks like a time bomb is getting bigger and bigger.
Yep.
But in the end, that amount of the shares will be released in the market. So how the market can absorb that huge amount of the shares is their biggest concern. So we have to think about that. And we actually started thinking about that right now. And
Mm.
in terms of the free float, so this is a very complicated issue. Yes, so the BOJ holdings is deducted from free float weight. So once the BOJ have the ETF, that amount will be deducted from the free float of that company. But that happens all topics constituent at the same time, simultaneously. So in a relative basis, the ratio will not change. So suddenly entire 2000 companies free float gets lower. So if you compare the share, which is within the topics and outside of the topics, in case of that comparison, you can see that relatively the topics constituent free float gets lower. But basically the majority of companies are topics constituents, so it doesn't change in a relative basis. And one more point, free float weight is different from tradable share market cap. That link to the listing requirement. So we have to be very careful in this point, actually. So even though the BOJ purchasing the ETF or sometimes the GPIF is purchasing the individual stock, it doesn't affect the listing requirement or the tradable share market cap.
I understand. It is confusing. The difference between tradable and free float. Yeah.
Yeah, so that's the point I really wanted to clarify to the professionals.
Yeah. Yeah. The activity of the BOJ, though, um, for a long time, I think it's a fact. We don't have to argue that the Japanese bond market, the JGB market, has been really distorted. And
Mhm.
you can see various strange things that happen because of the amount of ownership that BOJ has of that market.
Mhm.
You're working for the stock market. Um, I shouldn't ask you to say any secrets, but surely there must be some appreciation on the part of the BOJ that founder companies, some of Japan's greatest new companies, whether it's SoftBank or Fast Retailing or Rakuten, the owner has a lot of shares, and then the BOJ has a lot of shares, and that is really crowding out, other investors. And the JPX has an interest in a fully functional stock market. So
Yes.
I'm, I'm sorry for you.
It's a good point, of course. So it totally depends on the company, actually.
Mm,
So we cannot generalize the situation. But even though, well, let's say for some companies, so BOJ hold more than 30% of the outstanding shares, and owners hold 20 or 30% of the shares. But still, we have a 50% of the free float shares in the market. So now it is not a big concern for us. So, but it totally depends on the each company's situation, and until when the BOJ continues purchasing the ETF in the market. But well, we have to solve that situation until it gets too late.
mm, mm. One question here, which is a very good question, I think, is it's an anonymous question. It says there are too many lawyers and academics who serve as independent directors, which is not common in the ES, where in the US and the EU, 100% of independent directors are actual experienced business people. Um, is there any plan on the part of JPX to require some sort of qualification before you are before you can take office as an independent director?
I see. Uh, right now, to be honest and simple, we are not considering implementing a specific restriction or the requirement in terms of the quality of the independent directors.
Mm,
It also related to your question back to several questions. So you mentioned about the overboarding, right?
mm,
So we are not considering putting some certain restriction on the number of the overboarding at the same at the stage. It's the same one, and but a corporate governance code has a principle
yes.
that suggests the number of overboarding within a reasonable range, and also the quality of the independent director should be disclosed to the public. So we are right now relying on that item. So not having a specific criteria, but I just want to mention here. So probably you are against this opinion. Due to the limited number of the candidates in Japan, so putting a restriction on the practice of overboarding or quality of independent directors can be a double-edged sword for us. So we should be very careful on putting a certain restriction or requirement on the independent directors.
Yeah, to the person who asked this question, it's an anonymous question. As Kimura-san mentioned, there is, I want to say, at least one page, maybe 2 pages in the corporate governance code that suggests that independent directors have relevant training in financial and legal skills and so on and so forth. So there is not a hard legal requirement, but there is a soft requirement
Yeah,
that people demonstrate they have these skills.
yeah, it's just easy to pick the person from the legal or accounting area, right? Because it's already mentioned in the corporate governance code.
Mm,
So we understand that, but we are not requesting that.
yeah, yeah. Let me see what else. Here's a really good question. I always ask this question. Mark Goldstein from ISS says the fact that so many independent directors in the US are executives of other companies, current, or maybe they're retired, is also why companies struggle to improve board diversity because executive teams are even less diverse than boards. There is also an argument that boards composed of ex-CEOs are the reasons why boards are so inclined to agree to high executive pay. Maybe a few lawyers and academics aren't such a bad idea.
Yes, I understand that opinion as well. So independent directors should be a much more diverse in the long run. So we don't have to stick with the existing lawyers or ex-accountant or ex-CEO.
But when we talk about the shortage of qualified independent directors in Japan, my understanding is there is no legal reason why you, as a managing director of JPX, there's no reason why you could not be an independent director at Toray or Sumitomo Heavy, and it's just a custom and an expectation on the part of Japanese companies that unless you're in your office 80 hours a day, you're not really doing your job. So I think if we had some change of opinion about this, where people who, there are a few examples, right, where like Inai-san was sitting on Son-san's board, right? He's doing two jobs at one time. So that should be a supply of qualified independent directors too, I think.
Yeah, well, it takes a baby steps. So we need more example in the market. So.
Yeah. You mentioned in your presentation package, and I think it says in the official document, that there will be certain ESG requirements for companies who want to become prime candidates. What do you think will be the most likely ESG types of requirements? Because the feedback I get from Japanese directors, whether executive directors or independent directors, is that this is just too much compliance. It's just check the box. What do you think are the most likely ESG issues to be included in the corporate governance code or in the prime requirements?
Okay. First, I want to make this clear. So it is not actually the so-called ESG requirement incorporated into the prime listing requirement, but it already has a G element, such as a reduction in the cross-shareholdings.
Yep.
And probably the English disclosure should be required to the prime company, of course, because they are targeting the international investors. So in case if I were introducing that kind of a listing requirement from the ESG element, I'm going to say the English disclosure, and of course it's a independent committee style. 3-committee style must be required to the prime company. But by the way, so this is my personal opinion. It's not yet fixed.
Sure.
Yeah.
I think we only have a minute or two left, and so I'm going to give you a fun question from Mr. Kenta Takamori, who says, what are your expectations for the possibility of the emergence of Spax in Japan?
We are thinking about that right now, of course, but at the same time, well, in case for Spax to be successful, we have to have a lot of potential company to be acquired by Spax, right?
Right.
That's the problem we have right now. So in order for the SPAC to be successful, we need a lot of private, successful emerging companies. That is another problem the Japanese market is carrying right now. So we don't have so many private companies right now. So this is already addressed by FSA and other parties. So we are going to improve that area. But at this stage, it's outside of the Tokyo Stock Exchange. So we are not dealing with that area. But yes, of course, we are always thinking about whether we should introduce a SPAC or not.
Okay. I think we've gone through all the questions. I think there were one or two that maybe I didn't get to. And if there were questions that I didn't see or I didn't answer, please email me and I will try to get an answer for you, either from Kimura-san or from some other source. So please, if you have questions left over or questions you haven't thought of, please send them to me later. I want to thank everybody who asked a question. I want to thank Kimura-san very much for trying to boil down this incredibly complex set of rules and regulations to just something that we could understand. Thank you very much, Kimura-san. I guess it just is my job now to say thank you to everybody who attended. We have another one of the series in this corporate governance series coming up soon on the 17th of February with Mr. Oki Matsumoto, who is CEO of Monex. So I hope that you will tune in for that one, and look forward to some of the other ones we have planned in the coming months. So thank you again. I want to make sure to thank our incredibly generous sponsors who provide us not only with the funding to do all of our programs, but who are really a great source of ideas and advice and insights for us into what is going on into this broad area. So thanks to all of them. Thank you again for joining, and we hope to see you soon.